Ethereum, the world's second largest blockchain network. But what exactly is it, and how does it differ from Bitcoin? Let's find out. Ethereum was created in 2015 by a programmer named Vitalik Buterin. Like Bitcoin, it uses blockchain technology to enable digital transactions. But Ethereum has a few key differences that set it apart. One of the biggest differences is the concept of smart contracts. These are self-executing contracts with the terms of the agreement written directly into lines of code. This allows for the automation of complex financial transactions without the need for intermediaries like banks or lawyers. Another key difference is the ability to build decentralized applications, or dApps, on top of the Ethereum network. These are applications that run on the blockchain and are not controlled by any single entity. This allows for new types of decentralized services, like online marketplaces and prediction markets, to be built on top of Ethereum. Ethereum also has a faster block time than Bitcoin, which allows for faster transaction processing. And its native cryptocurrency, Ether, can be used to pay for computational services on the network. Ethereum is still in its early stages, but it has already proven to be a powerful platform for innovation. And with the ongoing development of new technologies like sharding and proof of stake, the future of Ethereum looks bright. Thank you for watching. If you want to learn more about money and how to make money, make sure to subscribe. Join us again to learn more about the world of Ethereum.